Welcome to Chit Chat Stocks. This is our weekly Power Hour episode. I'm one of your hosts, Ryan Henderson, and I'm joined, as always, by the one and only Brett Schaefer. On this show, we talk all things financial markets, and markets are in turmoil as we speak. Not really. I kind of say that in jest, but Brett's got his red light on in the background there to describe maybe the small correction we've seen in markets over the last month or so. Some stocks are seeing pretty major corrections, but for the most part, I believe the NASDAQ is down, I think around 10% from highs. So still relatively small in the big picture, but we've got plenty of topics to talk about. There was a short report on one of Brett and I's favorite holdings. There was a very interesting small cap of the week. We've got uh, sort of dumpster diving, if you will. There's a bunch of stocks down 30% this month that I want to pick your brain on. And then we've got a whole bunch of other news, but I guess, Brett, earning season is over, kind of maybe boring period. How are things for your portfolio?
Yeah, it was fun to read the short report yesterday. I always appreciate those because they can help bring to light anything that you may have missed when doing your research. We try not to be someone who, attacks the shorts. It's not a battle. They're trying to provide some information out there. And then, hey, if they are actually right about the company, well, we probably should end up selling. I was very interested to read Delta Airlines warning about their guidance, and then that kind of trickled down to some of the other airlines as well. And we have some bubble watch updating on the AI boom with CoreWeave, an interesting deal, maybe a circular deal with OpenAI, as well as something that I know was fun to talk about, but I honestly forgot about it. But I linked to it in our notes, so I'll bring it up later as another fun one.
Okay, before we get to any of the topics for this week, we want to talk about our friends at Public. If you're serious about investing, you need to know about public.com. That is where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account, 6% or higher yield that remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools that you need to make informed investment decisions. Their built in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset is moving. So you can actually understand what's driving your portfolio's performance. Public is a FINRA registered, SIPC insured, US based company with a customer support team that actually cares. Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/chitchatstocks and get up to $10,000 when you transfer your old portfolio. That's public.com/chitchatstocks. Paid for by Public Investing. Full disclosures in the podcast description. Where do we want to kick things off, Brett?
We have a comment here that we're sleeping on British American Tobacco. I will say that Ryan does own the stock, but does have a larger position in Philip Morris. As a little tease, we did have that episode out this morning going through our personal portfolios, and he says Velo Plus taking share from Zyn in the United States. I think that's expected due to the supply shortage, but would maybe confirm that they are actually, durable share takers is when the supply shortage ends in 2025 with Zyn, that they maintain that market share. But let's start, Ryan, with the short report. I read the report last night, but it looks like you did as well. It's on Remitly, and you have some nice notes on here from Spruce Point, right? Spruce Point Capital.
That's correct.
And what did they find? What concerned you? What was interesting about this short report?
Well, the timing was kind of interesting because we released an episode, I think that day, that I talked about Remitly being one of my top stocks, my top ranked stock in my portfolio. Spoiler alert for anyone who hasn't listened to that episode. I talked about all the things I liked about it, and then later that night, a short report was released. I don't want to be. I know a lot of people tend to be dismissive of short reports pretty quickly, and this is probably the first time I've ever had a big public short report unveiled on a top holding for me. Maybe there's been some others, but I've never really been on the side of things. Um, and I do want to look through because there is some good investigative work that goes on in these reports typically. Now they're very long. This presentation, I believe, was 74 pages long. So um, you kind of got to try to parse through and find what really matters. But I'm going to go through and look at uh, basically two things: what I find concerning and what I really don't, things I basically think they got wrong or don't care about at all.
So
Um,
if you were Elon Musk and you would screenshot it and you would put it on Twitter, concerning, one word. These are those are ones that you'd actually care about.
yeah. Uh, Overall, the theme of the short report was basically that the company is not as trustworthy as they seem, which it's, I mean, the funny thing is, the stock actually jumped like 6% in after hours when the short report was released. It was just coincidental timing because I think they were at a big conference as well. But the stock really hasn't reacted at all, so it's not like there's some big impact and I have to choose whether or not to buy the dip. Um, but let's go through some of the things that don't concern me. There was a lot, so I kinda condensed them into a few, but number 1 was dubious customer reviews. So Spruce Point did a reverse image search on some of the customer testimonials that are on Remitly's website and said that the customer images are just stock images. Uh, I don't know why Remitly would do this. I don't know if it was meant like they just didn't wanna ask customers for images, but I think this is one of, like, who cares? They have 7 million customers. I'm sure they could have found someone of those
Right.
7 million active customers to give them a testimonial. I mean, it's very easy to do that. So,
Yeah, yeah, exactly,
it's
and yeah, it was weird that they used stock images, but that might be, again, because they were getting the quote, but they didn't wanna put publicly these random person's, image and likeness. That's not really the point. The point is that they have a 4.9, percent, sorry, 4.9 out of 5-star rating on the app stores. So, you could find with any of those public reviews, probably a million different positive testimonials for the product.
yeah. So I thought that one was kinda pointless. It's frustrating because sometimes you read these short reports and they include stuff like this, which seems so pointless and, like, way off the mark. Like, this has no bearings on the outcome of this investment, and it makes you think, like, "Is is this worth reading?" Because it just seems like they're pointing out all the stuff that doesn't matter. But let's go through number 2, displacement risk from stable coins. People talk about this risk all the time. I think it's been kind of, people have been talking about it for the last 5 years, that, like, all global transfers are going to be displaced by crypto in some way.
It's a known risk.
A
Yeah.
Yeah, I don't really, I don't believe that risk. Maybe I believe that that could be a risk, but I don't think that's going to affect Remitly, and I think it's actually kind of off the mark of what Remitly's customers use the platform for. So, for reference, Remitly allows users to send money back home or across borders, and it can be received in a lot of different ways. So it could be a cash pickup, it can be digital uh, distribution. There's a lot of different ways that they could do it. And so for if you're sending money back home to your 70-year-old mother uh, in a foreign country, and I just feel like she's a lot more likely to say, "Yeah, I'll go pick up some cash at the station," instead of like, "Yeah, let me figure out how to get on this platform to get this stable coin transfer." It just doesn't seem like that's really what's being used here, or the common use case. Number 3 for me is they were massaging their app ratings. Basically, they call out that, like, Remitly has these subtle definition changes around where they're collecting their customer ratings from, but you can just go to the App Store and the ratings look fine, and it's n look, you have 2 million ratings. I think they're around 2 million ratings on the Apple iOS App Store, and they have a 4.9 stars. That's, like, something you put in a, like, a thesis, like a buy thesis, not.
Yeah, exactly, and they could be faking all those ratings if they paid some bot farm in
You
India,
can't.
or right? But, I
You
mean,
can't fake
that's a
2 million
lot.
ratings.
Yeah, that would be quite the I don't know. there has to be a lot of those going on if you're gonna, have that happen. I think the rating kind of speaks for itself. They did have some interesting things about bad reviews on Trustpilot, but when using a remittance product, there are similar to other things where there are going to be restrictions on what you can do. There are always going to be bad reviews because people are going to be restricted given the know your customer policies, and they're going to get frustrated over that and give you bad reviews. It's almost like when we talk about a stock that someone likes and we don't like it, it doesn't necessarily mean our podcast was bad. It just means that someone disagrees with us and got mad, and they don't, and you kind of get what I'm saying there, Ryan.
Yeah, I mean, you get reviews. You don't get reviews from like the customer that was just satisfied. You get reviews from the people that were either really disgruntled or people that really like the app. So if you have a really good rating, that goes to show that you've got good reviews. I I just look, who cares about the ratings? They have billions in transfer volume. Obviously, people use it. Like, there's no way they've got 2 million bots from a click farm giving ratings if they have billions and billions in transfer volume. So, yeah, it doesn't matter. So anyway, that's one of those things that I don't really concern myself with. Number 4, they mentioned that they didn't have success with their affiliate program. I mean, this is
It's
I
another one.
run
The numbers
yeah,
speak for themselves
exactly.
on the volumes.
I manage an affiliate program for FinChat. Look, it's kind of a choice whether how much you want to provide to affiliates. Like it's almost like a Salesforce in some way where you're giving them certain commissions and all that. If Remitly can attract 7 million customers without needing the concessions of or like sacrificing lifetime value or some of the revenue by giving commissions to affiliates, there's no harm in doing it. If they really wanted to juice the affiliate program, I'm sure they could have. So I don't know. I thought that was kind of pointless. They have 7 million customers. The proof is in the pudding.
Yeah, they did. There's one. They did talk about changing the definition of active customers slightly, but again, if they were really doing that, then send volume would be growing. Right? If they were doing that to manipulate their number higher, then send volume probably wouldn't be growing. So again, it all comes back to, well, is the send volume growing? Yes. Okay. Then I don't think these things are really that big of a deal. And if you look at, well, maybe pull them up with our friends at FinChat, I think send volume growth has been accelerating. Maybe, maybe not, but you hit the next stop and I'll find that number for you.
No, I think that's correct. I think customers have been growing faster than send volume, but still, I mean, both are growing at a pretty impressive clip. The other one that I really don't care about is they said they only added 100 new corridors in 2024. I mean, yeah, that's part of what happens once you already have 5,000 corridors.
It's
You've
yeah,
hit the big ones.
it's all right if you don't have Kenya to Uganda. That
Yeah.
one's not going to be as important as the United States to India. That one, United States to India, or United States to Mexico, or United States to Brazil, is going to drive the boat way, way more than 99% of other corridors out there.
Yeah. And then the last one that I'll talk about, there was a lot that I thought wasn't great from this report, but they said Wise is a formidable competitor. That's very known. But I think they serve different use cases. It seems like they didn't use the app of either of these. Like if you go through, I mean, I've been a user of Wise for 2 years. Yeah, there's some great things about the platform, and the low cost is definitely a potential long-term risk to Remitly, but there are some serious detriments to Wise's platform. We talked about this in the last episode of, the user experience is not great. And Remitly's user experience is seamless. It's very easy to transfer money. Um, and I think they like I said, they serve kind of different use cases. Some people aren't as concerned about shaving off half a percentage point of cost, and they're more concerned about how is it being received by the family back home, where Remitly really, really serves that use case well. So, I mean, they've both been growing. I don't think it's a winner take all. It's obviously not a winner take all because both of them are winning. And then the other part, They talked a lot about the competitive positioning. They even talked about like Western Union being a formidable competitor. And this
Yeah,
just
that's where they lost me. Yeah.
like look at any download data. Go use any of the apps. Remitly is way better than Western Union. And you can see that in the app download data. It just felt like there was a lot of stuff here where they were really grasping at straws. Like it felt like they maybe got some sort of skepticism around the management team or the board members or something like that. And then they tried to find a whole bunch of other facts to support their case. But pretty much all of these, you could kind of turn around and say, A, the proof is in the numbers, and B, these aren't really bad things at all.
These are known concerns. If they are concerns, they're things that the bulls or anyone that owns the stock are well aware of. Now, let's talk about what was actually concerning from the report, Ryan. Micro lending and turnover in their risk, compliance, and legal departments.
Yeah, one of the things that concerned me was this micro lending aspect of the business. So they have not been very transparent about this. Or, I mean, I looked through some of the recent conference calls. I haven't seen the Flex Plus program is what they call it, or the term lending really mentioned at all. And so basically, this is them giving micro loans or cash advances to people on transfers, some of their users. I'm not sure what the qualifications are to be a part of this program. It's a subscription, so you have to subscribe to be in the program to have access to the cash advances. But the fact that management hasn't talked about it at all is kind of concerning because there is a revenue element there. And that's the only part where it was like, if this is a big piece, like ultimately this entire short report doesn't matter if revenue is growing, essentially, because they were saying, oh, take rates coming down. They don't have as many customers as you think they do. They're, misdescribing certain things. They're changing the definitions. But if revenue is growing, which in my mind is transfers, then it's okay. But if some of that revenue is growing from micro lending or like interest earned or subscription fees from that,
Right.
then
What's the size of that division?
there's some risk that maybe there's something to the short report. So I would like to see them provide a little transparency on this program. They might not have talked about it because it might be so small it just doesn't matter, which I kind of hope is the case.
Yeah.
The second one that concerned me is there has been a lot of turnover in the legal, risk, and compliance departments. I think even in the CFO and CAO, Chief Accounting Officer suite as well, or at least there's been new ones that have come in recently. Uh, you just don't love to see this. Now, everyone kind of has their own reasons for uh, changing careers, but the thing that I kind of found funny was right above their report, right above them talking about all the turnover, they say that Remitly doesn't pay as well. And then they're like, there's been a whole bunch of turnover.
Well, that was an interesting thing, and they were talking about how the customer support. They were trying to make a whole thesis on how they're not paying customer support well enough, and I was thinking, like, look, it just means the product is much better than Western Union digitally. They're utilizing all these new AI chatbot tools, so they don't have to talk with a real person and try to solve these problems much quicker. Yeah, I mean, look, they're maybe we're going a little long on this topic, so I'll maybe wrap it up. There were some things that are potentially concerning, some yellow flags here within this report, and I would hope that if Remitly was asked about them in a public setting on at an investment conference or on the next earnings call, that they would talk about it honestly and be forthright with investors about it. But it doesn't change my thesis on the company. For anyone interested in the send volume growth, because again, it all comes down to this, and it all comes down to one, building the long-term kind of cross-border digital personal finance app for these core customers, the ones that are sending remittances, the immigrants sending stuff home. December 2022 send volume growth was 35% year over year. December 2022, 2 years later, last quarter, December 2024, it was 39%. And I would expect the take rate to come down over time because at scale they can provide a better product and charge, their costs are coming down. So again, some of this in the report, yes, it was good that they pointed this out, but it's not scaring me away from the thesis. Yes, the thesis isn't guaranteed to be correct. Like any stock you own, it's not guaranteed to go up, but I still like it. I still like owning the company.
Yeah, there was nothing in here that was a deal breaker for me. And then they also tried to talk about the valuation being extreme, and it's like they aren't, and they used profitability
It's
metrics
not.
on a
Yeah,
company
it's
that
not.
isn't really profitable yet. So, yeah, I don't think it's expensive. Uh, it felt like they were kind of trying to add on to like this could have been a 15-page report and just talked about some of the
Yeah.
qualitative stuff with management. But
I think
anyways,
the timing was interesting because the stock did go and had quite the run over the last 6 months. It was up, I think, about 100%, and that broke in the last few weeks along with kind of the Momo bubble. And I think the timing on this makes sense. They were trying to hit something that's a high flyer, still not that profitable, you know. Yeah. The timing, it makes complete sense.
all right. There is a question from Tyler in the chat here, which I do want to touch on. But before we do that, I want to have a markets in turmoil segment with you, Brett.
Okay.
Markets are not really in turmoil, but there are a good chunk of stocks down quite a ways from their highs. And I just ran a quick screener, and there was a list of stocks. Here's a quick list of stocks down at least 30% in the last month.
Before before you say that, did you know, Ryan, that every time CNBC has posted a markets in turmoil, if you bought the next morning, 100% of the time you're green for the year?
That's a pretty incredible stat.
Yeah, so maybe we can jinx it, and if we keep saying markets in turmoil, it'll be the stocks will be green for the year. But go through your list. Some interesting ones here that are what down at least 30%, maybe more.
Yeah. So without any other context, you tell me if any of these stocks interest you. All of these stocks are down at least 30% in the last month, and the ones lower on the list are down by a greater percentage. So, number one, Cloudflare, Duolingo, Tesla, Confluent, AppLovin, MongoDB, Block, Palantir, Robinhood, Rocket Lab, Carvana, Marvell, Kava, The Trade Desk. Do any of those interest you?
Ooh, maybe not at these prices, but gut instinct, I'm going to say Duolingo because despite my instincts on the non-modiness of the business, they just perform so well, and it seems like that founder and that just team in general is just top notch. Um, then I will say Rocket Lab and Kava. Both of those interest me. Cloudflare, out of my circle of competence. Tesla, no, I don't think it's cheap. I don't like the company at all. The next two, well, AppLovin, no, I don't. We've talked about that. There's some major concerns there with that business. Block, no. Palantir, no. Crazy CEO. Robinhood, no. Carvana, no. Marvell, don't know anything about. Trade Desk, well, maybe the Trade Desk. 52%, Ryan. What's it trading at now? What's the
I don't know.
ironically, what's the Trade Desk trading at?
It
Probably a PE
is,
of 80.
yeah, it's still pretty richly valued if I remember correctly, but it's nearing its largest drawdown ever, actually, which I find kind of
Yeah, I mean, this
interesting.
stock wasn't gonna work. It was so expensive. Let's see the EV to gross profit. Just put that as a basic one. We are at 14? Alright, that's not terrible, but I mean, what is
That's not
Remitly at,
cheap.
like, 3?
For being down 50%, that is not super cheap.
No,
Uh,
it was at 40 just a little while ago. Yeah.
anyway, yeah, it feels like right now some of the more speculative names are the ones that are really getting hit. Maybe this is just how it works in every sort of recession, correction, bear market, whatever. Uh, but you're also getting some reasonable drawdowns in stocks like Amazon and Google. I think both of those are around 20% drawdowns right now, which
Mhm.
whatever.
American
This
Express,
is no way to value a
Airbnb.
company, but yeah.
Yeah, drawdowns don't necessarily mean it's cheap. Let's hit a question here from Tyler that relates to this kind of the recessionary fears. People worry that we're, eating our, we gotta, what is it? We gotta go through a tough period to come out the other side. That's the whole narrative right now. Who knows whether a recession is going to happen because everyone thought a recession was going to happen in 2022 and it did not. But Tyler says, if we get a recession, which of your holdings do you think performs the best and the worst? Ryan, anything come to mind for you?
Well, I mean, people buy more cigarettes in a recession, I think, right?
I
Those are
I
pretty.
think I think that was actually I looked up the data on that once. It's kind of a misnomer. It doesn't hurt or help.
Yeah, I imagine that would be pretty unaffected. So Philip Morris and British American Tobacco, I think, would both hold up pretty fine. Maybe Philip Morris, just because it's a little more richly valued, would be at a bit of risk there.
I kind of think Nelnet because it's a bit idiosyncratic, and a lot of their stuff is not discretionary stuff. Oh, sorry, I said stuff there twice, but a lot of their business segments are discretionary. Okay, look at it. Solar tile roof stuff. You have student loans. You have banking. Maybe the bank would get hit a little bit, but that's a tiny part of the business. You have that education and payment software. Yeah, I think that would do fine during a recession, especially because once the price gets down to a certain level, they just hammer the buyback and don't let it fall any further, which is not a bad thing to have if you're a shareholder.
Yeah, the other one company that I own, not a ton of shares, but I own Amazon, and this is a business that, well, now it's a little different because I think a recession would impact AWS revenue growth. But that is a business that every single time there has been a recession in its existence, they have come out better for it. People turn to them to be sort of the low cost provider of goods. It accelerates. I think it accelerates cost savings both at businesses and on the consumer level when you're in a recession. And typically, Amazon benefits when people are looking to save costs. So and they save costs usually in those instances too. Like we saw it in 2022, profitability expanded relative to prior to COVID. So it's probably one that would get hurt in a recession, but it's also one that I would be most inclined to buy in a recession.
Yep, and we had another question in the Substack chat, which is getting pretty active. So hop on over there. The link's in the show notes, the free newsletter and chat community. Someone said, "What stocks come to mind that will do well with a weak dollar?" I'm not someone that's going to predict or not whether the dollar is going to depreciate. If the dollar index in general across all these currencies is going to depreciate. But what's strange is looking at my portfolio, I have a lot of companies that will benefit from a weak dollar. So I'm a little kind of rooting for it. Nintendo should do better. Philip Morris International should do better. Coupang should do better. The two Mexican airports plus the Mexican stock exchange should do better with a weak dollar. Essentially, how you would think about it, it's just any company that earns outside the US.
Would Nintendo really be that affected?
Well, more than half of their revenue comes from outside the United States. So if the yen depreciates a ton, that hurts US dollar earnings. That's why their operating income in US dollars has gotten hit so much. So, and then they also have a big European presence. I think for them, it's specifically that yen depreciation, which just totally collapsed, but is on the road to recovery. And that's why, that's one of the key reasons why the stock was up so much in the last few months.
Yeah, I was gonna say that it's not necessarily in terms of FX headwinds. It's more on it's just the earnings in dollar terms aren't as good. Like, because they're
Yeah,
not
it's like
really
the
transferring
opposite.
them across borders. Like,
Well, let's just say if you are in I'm speaking as someone that is in the United States, I don't care what they earn in yen. I care what they earn in dollars and pay me in dividends in dollars. So if the yen depreciates a bunch and their quote unquote earnings go up in yen, doesn't mean that much to me.
yeah, I mean, some of the ones that are like take rate businesses are pretty protected here in terms of a weak dollar because there's it's all kind of inflation protection, right?
True, I
Like
guess. I'm trying to
Remitly,
think
I'm trying to
through
think
that
through
one.
this.
I'm trying to think through that one live, but
Remitly would
either
be
way, I don't
fine.
think about it too much. And I don't know whether anyone can predict whether the US dollar will go up in value or down, and let's let the macroeconomists waste their time on that one. But it is a good question
What
because the
would
dollar
perform the
has
worst
fallen
for
a
you?
lot. What?
What stock
Sorry.
would perform the worst for you in a recession?
Ooh, good question. I think Portillo's.
People aren't going to eat their chili hot dogs anymore.
Well, if they get if comp sales just go like they're in a, I wouldn't say a precarious spot, but they're in a they're not in a comfortable position with comp sales. So if comp sales turn 2, 3, negative 2, 3, or 4% for a while, yeah, the stock's going to go down quite a bit.
Yeah, for me, tempted to say anything that's like Ally Financial could potentially be impacted, but people tend to pay their car loans back kind of regardless of the economic environment.
Yeah, that's true. Yeah, that's a good one. But I think the stock would react pretty negatively.
Yeah, I think the software, I mean, Paycom's levered to like employment. So if unemployment spikes, they could be impacted. But
Yeah.
I don't care a little bit. Like I don't really care
As long as they can
because
make it through to the other side. Like, is the
yeah,
business and honestly, you mentioned that Amazon one, are they set up, which I think of someone like an American Express or an Airbnb in this regard on my watch list, would and these stocks have gotten hit, if a consumer recession, if the travel recession, which we're about to hit here, happens, these stocks could go down 50%, but I think they would be stronger brands on the other side because they can weather the storm with their rock solid balance sheets. And that could be one where you think, okay, I got to look forward 18 to 24 months here. Which ones could be good buys?
yeah, it's the anti-fragile discussion that we just had with Brian Stoffel, which that'll be a great podcast. I think it's coming out 3 days after this one's released. So, um, but yeah, like okay, I'm looking through some of my companies right now. DR Horton, for example, if there was a huge recession, DR Horton's pretty asset light, and there's probably a whole lot of home builders that are in a very would be in a very difficult position. They don't have quite as low of costs as DR Horton or quite as low of unit economics. So those people having to forfeit their land, DR Horton being able to pick that up on the low, I mean, it feels like they would be advantaged by a whole bunch of other companies struggling in their industry.
That is a perfect example. Yeah, I agree with you right there. All right. I'm going to load up my notes on Delta Airlines and their guidance and how that spooked the travel market. But Ryan, why don't you talk about some of our sponsors as we hit halfway through the episode here?
Yeah, first one I'll mention is Blue Chippers Club. I know a number of our listeners have joined Blue Chippers Club, and I couldn't recommend it enough. It is a tight knit community of stock focused investors. It was recently started by two friends of ours. They have weekly calls. You can share your portfolios, you can pitch stocks, you can receive feedback. I actually heard about a recent one from someone who's in the comments right now. I don't know if he'll want me to call him out, but John, thank you for recommending a company in last week's call. It was very interesting. I've been looking at it since. But you get a lot of value out of just exchanging ideas with people in more of a true focused community as opposed to just over broad social media. So I really do recommend it. You get a lot of collaboration through this community. It is totally free. So there's no risk in doing this. It's bluechippersclub.com. You can hit apply. The link will be in the description. And then I also want to call out another one of our sponsors as well, Public. Again, if you're interested or you're serious about investing, you need to know about public.com. That is where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account. Public is a FINRA registered, SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/chitchatstocks and get up to $10,000 when you transfer your old portfolio. That's public.com/chitchatstocks. Paid for by Public Investing. Full disclosures in the podcast description. Brett, what did Delta Airlines say this quarter?
Well, they didn't report, but they had to pre-cut their guidance for Q1, which is never a good sign where before the quarter ends that it's going to be way worse than you were expecting just a month ago. So something has changed dramatically in the last month. The theory is it's all the disruption from the new administration on these firings and all that stuff. But they put out a press release and it's hilarious. Well, they put out an 8K, but I think it's quite hilarious when the company chooses not to make it an actual press release when every other 8K they make is put onto their press release page. So you have to go into the SEC filings. They do this like they act like we're not gonna see it all. eventually, but they did put it there. I'm going to read out what they said. Okay. Delta expects to deliver total revenue growth for the March quarter of 3 to 4% year over year. This outlook has been impacted by the recent reduction in consumer and corporate confidence caused by increased macro uncertainty, driving softness in domestic demand. However, premium, international, and loyalty revenue growth trends are consistent with expectations and reflect the resilience of Delta's diversified revenue base. Now, the guidance has been changed from initially it was 7% to 9% year over year growth, regardless of that corporate speak, which just makes my mouth feel yucky repeating. This isn't huge, but it is a pretty sharp slowdown. Now, it'll be interesting to determine whether it's a start of a trend or just a short-term blip along with this corporate confidence and the uncertainty around with the tariffs and all the firings within the US government. Because United Airlines CEO said, we have also seen weakness in the demand of the market. It started with government. Government is 2% of our business, government adjacent, and all the other consultants and contracts that go along with it are probably another 2 to 3%. And that's running down about 50% right now. We've seen some bleed over to that into the domestic leisure market. What do you think, Ryan?
I think this is the first time I'm really seeing the recent changes from, or I guess some of the actions taken by the current presidential administration. This is the first time I'm seeing it actually impact financial results. And technically, it hasn't impacted them yet. It's more just like forecasted impact. But it has felt lately like a lot of speculation around what could happen under this Trump administration, is what's kind of been the impact on stocks. But as far as results go, this is the first time, and it was helpful color from the United Airlines CEO around how much of their business is government, because you can see that obviously if they're cutting budgets across the board, travel budgets is probably one of the things that's more discretionary, you could say, and some things could probably be done over Google Meets or wherever else. So,
Or
it
if they get laid off, they're not flying on the
yeah,
government
that
dime
too.
anymore.
So, yeah, it's kinda interesting to see it actually impacting businesses. I'd I don't know. Sometimes I feel like this is more just unrelated to the Trump administration, like macro uncertainty feels like a broad catch-all term when it could just be like people are spending less across the board. It's got nothing to do with the presidential administration. Um, I don't know. I don't know what the cause is, and it feels like it's hard to really ever know the true cause of a slowdown. But we're seeing this in some of the discretionary retailers. Volumes at Target have been rough for a while. Like you're seeing, I think, penny pinching kind of across the board. I don't know if just it's nice to have someone to point a finger at and say like this is what's causing it, but it feels like okay, 2% of their business is government. 2% of it is not going away. So it's not like they're cutting that to zero, would be my suspicion.
Yeah.
And I don't- doesn't this feel like a bit like a cop out? It was Target kind of had the same cop out too. They're like, people are worried about tariffs. It's like, no, they're not.
This is less of a cop out than Target. Target was absurd. This one makes somewhat some sense, but yeah, we don't know exactly how much is directly getting affected here or if it's just the mindset of people that do not like the uncertainty out there at the moment or, government or non-government related. In relation to Delta's stuff, American Express, one of their largest partners, perhaps their largest partner, fell on the news and has been falling in recent weeks, Ryan. But I thought maybe this was misguided from the report because when you look at their caveats, they said premium, international, and loyalty revenue growth trends are consistent with expectations. Okay, loyalty revenue is that's the American Express revenue, and premium international are what the American Express customers are spending on. So I thought that was interesting. Today, American Express, as I'm looking at loading up right now on FinChat, use our link finchat.io/chitchat, get 15% off any paid plan. PE is 18.7. What do you think? You like it here?
Yeah, I do. And everyone like runs to the hills for American Express because of the interest rate risk, but it's really not. Like everyone says, "Oh, they're like Visa and Mastercard, but they take all the risk," and it's like not the
Oh, you
biggest
you
part of
mean
their
the credit
business.
the credit the lending risk?
Yeah, yeah.
Yeah.
I mean, yeah, the lending risk. But A, if I remember correctly, it's not that big of a part of their business, and B, this is a very resilient category that they are lending to in their credit portfolio.
Yeah, I agree. It seems I like it here, I don't love it. I think I tweeted out 15 PE. I'm back in. I guess I've never owned it in my personal portfolio, but, what I think kind of a normalized PE, kinda they've had some adjustments you've had to make, with those numbers because of some acquisitions and some sell-offs or sorry, because they spun out something, they sold some asset and had a one-time gain on it. But 15 PE, I think, makes a ton of sense for a buy and hold and just a never sell investment. They have that buyback, they have that growing dividend, they're inflation protected. I think they're gonna have slow market share gains over the long term, and that can lead to, especially if the buyback can reduce share count at a 5% annual clip with the PE down to 15, that can lead to 10 to 15% annual earnings per share growth forever, right? So, not bad.
Yeah. Yeah, and I find myself this one in particular, there was a point when you could buy it, I think at like low teens earnings multiple when we were first starting to look at it. And I just in my head always anchor to that valuation or that price and think, oh, it's not as cheap as it used to be. The forward returns don't look as good. But this is a very resilient business and they are in a much a different but better position than they were in 2019. Like international acceptance is significantly higher. The card holders are skewing younger and younger. I mean, it feels like they have a decade ahead of them of solid growth. So yeah, I think I'd be interested around 15 times earnings. I do want to talk small cap of the week because we got a shout out from a follower of the show. Do you want to move to that now?
Yes, we can. And, yeah, I was about to ask the same thing. The company is Perion Network. I think the ticker, if I'm getting it right here, because I'm trying to load up something on FinChat, PERI. Right, Ryan? Is there any chart you'd like me to share for this company?
Um, Maybe you could do the total shares outstanding quarterly,
Okay.
but it's a little hard to tell. This is very like timely. It's kind of a time sensitive pitch. So we first talked about Perion on our investing power hour number 124. And just to revisit what they do, Perion Network is an ad tech company offering brands, agencies, and publishers a way to reach customers across multiple platforms and channels. It is focused on three areas within digital advertising: search ads, social media ads, and display video slash CTV ads. the the reason this is kind of event driven, if you want to call it that, is 4 years ago, Bing accounted for 45% of revenue. However, on June 10th of 2024, Perion put out a release stating the company said the relationship with Bing was essentially dead after it was notified by Bing that it was one of several publishers being excluded from its search distribution marketplace. So here's kind of the summary of the story. There's this ad tech player that has actually been around for quite a while. There was a 2006 IPO. I was assuming that it was like a SPAC or something, but it's not. The valuation got bid up in 2021, so they did a bunch of equity raises. I think they raised a total of like 400 million in cash. Maybe that was just their ending cash balance. Then they got rug pulled by Bing. Now they're expecting to do around 20 to 30 million dollars in free cash flow minus stock-based comp per year. So a reasonable amount, and they've got a market cap of 380 million. If you just look at the forward expectations for earnings and the market cap, doesn't look that great. But remember, they have a huge cash pile. It's technically the market cap is $374 million to be exact. They have 373 million in net cash on the balance sheet. So they have an enterprise value of roughly zero. And they're expecting here's the thing is I'm taking it on whoever's word it was that I read this report on that they're going to earn 20 to 30 million. I'm not totally sure on that. But let's say they are even somewhat profitable. They can just continue to gobble up shares with their current cash pile, and that's what they're doing. So I'm revisiting this because someone messaged me on Twitter this week and said, new buyback authorization of $50 million, bringing its total authorization to 125 million. It has already bought back 46 million. The company has a $400 million market cap. It's a lot of numbers. He said, any interest now? Just to recap here, over the last three quarters, they've reduced shares outstanding by 7%. This looks honestly like a phenomenal setup. And I think I'm going to start doing a little more digging here because if people are just leaving this for dead because it used to be like a growing ad tech player and now it's been rug pulled by Bing and you're getting a potential enterprise value of zero with something that could earn $20 million a year. I mean, this is a truly, truly wonderful setup.
And they're buying back a lot of stock. Yeah, interesting. Interesting for sure. Let's see what the market cap is right now.
I think it's
Three,
374.
yeah, I'm getting 378 latest update. Yeah,
It's up, I
interesting.
think, a lot today. But this is one of those situations that I also like it because the company is buying back so much stock, it's probably moving the stock up on its own, would be my guess.
Yeah. Uh, I wish I liked these type of businesses because I have no idea what sort of long-term competitive advantages they have. It doesn't seem like a good business, but definitely a special situation. If that's your thing. Could be one to take a further look at.
Yeah, the only thing I'm looking at here is for, I guess, further reading, I want to get a grasp on whether or not they can really do 20 to $30 million in earnings. How much of that is at risk in an advertising slowdown, let's say? If they can be profitable, then the numbers look great. So, if I get any confidence around them being able to be profitable, who knows? Maybe this could be a small position.
Yep. Yeah, I like it. I like it. Did the stock go down or up since we last talked about it?
I think it's up a little bit. I think it's up like 9% in the last 6 months.
So pretty flat. Yeah, not too. Yeah, I'm seeing not too much movement after that rug pull, as you called it.
Yeah. What do you want to talk about? Bubble watch?
Let's hit the bubble watch, Ryan. The first question I have, and this is well, who knows when you listen to this, maybe the market's gonna rip higher. What's the Nasdaq 100 doing today? I actually didn't check. It's only up 0.9%, so I guess the pump isn't working too well. But there's been some conversations. Berkshire has a cash pile approaching $350 billion. Did Buffett call the top? What do you think?
Yeah, and as a percentage of total assets, it's like up significantly. But I think it's cash and short-term investments, which I
Yeah,
mean,
Treasury. Yeah,
yeah,
that's
it's
cash.
not like they're earning nothing on it. Like, but yes, I guess that is him in a way saying that he's not finding any better ideas than treasuries right now. Um, yeah, I guess. I mean, it's so funny the way these things work because every time he starts to accumulate cash, they're like, he's missing out. He doesn't, he's lost his touch. And how many times do people have to say that? Berkshire has outperformed the S&P 500 over the last 15 years, 10 years, 5 years while owning a ton of cash. And it's I think people he has phenomenal timing even though he owns things for forever. It
Yeah,
seems
and he's
like
probably, he's 90 something now, so he's not doing as much proactively anymore. But they set up this high quality set of assets in the conglomerate that all works very fluently together a while ago, and it can not run automatically, but it does quite well regardless of if you try to, help it as a capital allocator. I agree. I think Buffett, when he speaks, he says, "Well, this is normal. This is just something we do." Where he tries to be the folksy guy, but I think in reality, he was very scared about market valuations.
yeah, and maybe that was the rationale for selling off Apple as well.
Oh yeah,
I imagine if he could, he's probably putting as much work as he can, as much money to work as he can in Japan right now, it sounds like. So I imagine if he could put more to work, he would.
Yeah. It's not big enough.
No.
And he's not gonna be able to buy out the whole companies.
Do you wanna play this game of what should Buffett buy?
Yeah, that's always a fun one. Trying to think. Hershey
These
will never sell to him, but that one makes sense to me. Maybe some of the alcohol companies, although he's a bit anti-alcohol, but they did own Guinness a long time ago and Budweiser or Anheuser-Busch. Some of those may have made sense, but again, not big enough. I'm trying to think of something they could put $100 billion in and buy out
or maybe he could
altogether.
just buy all of Chubb.
All of Chubb Limited? Yeah, maybe. Is that another insurer?
Yeah.
Yeah. Okay.
I can't
I have
remember
no clue what they
exactly
should buy.
uh, it's a commercial property and casualty insurance, $116 billion market cap.
Wow.
It would be a nice little addition to their insurance portfolio. I don't know if he
Buy
has any
what?
limitations on being able to buy the whole thing, though.
Yeah, yeah, true. And maybe they buy out Progressive, the company that's beating, whipping up on Geico right now. Some people would say Costco, but he did decide to sell it on valuation concerns. And that brings us to my second bubble watch, Ryan. It's going to serve as a nice little FinChat ad. Your boss, Braden, uh, said he was having fun using the new custom metrics tool on FinChat. And he was illustrating in a different way, in kind of a unique way, how you could put Costco's valuation or multiple expansion, in a different light. So if you have a chart, which I'll share here in a second, market cap per square foot. So each square foot of warehouse has risen by 5.5 times since 2017. Let me share the chart here. It's gone from under 1,000 to $3,600 per square foot. That's quite the multiple expansion, Ryan. I don't think Buffett's going to be buying this one, even though he likes the business. I don't think he's going to be buying this one anytime soon.
Yeah, and sales per square foot has not grown nearly at that rate.
Yeah,
It
eventually, it's impossible to just turn over that much inventory, right?
Yeah, I mean, they're pretty much working at capacity, I'd say right now. Uh, and they're not really a company that's known for hiking prices, beyond their standard 15% upcharge. So, yeah, not really sure. It, it's got to be weird to kind of be in Amazon shoes, or not Amazon, Costco shoes here, because I can't imagine that they love being this overvalued. Like, it kind of presents, it's not like, yeah, I assume you don't have a whole bunch of employees that are getting stock options, so it's not like their net worth's gonna be that affected, and they might just be sort of unsevered or I guess completely severed from the stock price altogether, the
Yeah. Did
operations.
you see our hourly workers now $30 an hour? They pay well.
It's a
They pay
well-run
well,
business.
and
Probably
that
one
they
of the
pay
best
well
run
because
businesses in the world.
yeah, they pay well because like when they pay the workers well, they create a really great store environment and the customers spend a lot more. Yeah, it's a nice self-reinforcing system. In the comments here, someone says Buffett should buy American Express outright. That would be fascinating, but they're just anti uh, holding a bank because of the Bank Holding Act or whatever some rule it is that complicates things for the company. Besides that, it would be a perfect acquisition, but don't think
Yeah.
it's going to happen.
I saw someone I said I showed the enterprise value per Costco warehouse at like $500 million, and someone said they should split every one of these into a separate company so we can analyze them on a warehouse per warehouse basis.
Oh god. Oh god. People, I guess we're doing it right now. We spend too much time on Costco. The stock is overvalued. It's not. Maybe it's fairly valued, but it's trading at such a premium price. Like there's more interesting things out there, and we don't need a debate of whether it's still a buy at 50 times earnings.
Yeah. I will say markets are getting more fun again with the kind of recent drawdowns. I find maybe I need to zoom out a bit because relatively speaking, these
We're back
valuations
to
are,
October. Yeah.
yeah, But it's nice to be looking at stuff and say, all right, that price is reasonable. I can see how it works from here. And this is, it feels mostly narrative driven at the moment. Just the
Yeah,
market. I mean, market's always narrative driven, but the concerns around complete consumer slowdown seems very narrative driven by basically whatever the president tweets.
true. And there's also some stuff that, Ryan mentioned, it's like a 10% drawdown on the broad market. We talked about the stuff that's in a 30% drawdown. There's plenty of stuff that's on my watch list in a 20% drawdown. So there are individual stocks out there that could look a little cheap if you have a long-term time horizon. So wrap up here, Ryan. Want to talk this CoreWeave potential narrative pump before the IPO? Did you see this?
No.
Okay, so there was a report out. Well, not a report, just they told the news outlets that, and here's a quote from Reuters. Quote, CoreWeave, an artificial intelligence startup backed by Nvidia, has signed a 5-year contract worth $11.9 billion with OpenAI ahead of its hotly anticipated stock market launch. And OpenAI is taking a stake in CoreWeave. So they're getting uh, they're actually not giving any money to CoreWeave, so there's not any fundraising going on here. But there's very when you have the Nvidia relationships with all these companies, CoreWeave and all these AI startups, along with OpenAI, it seems to me like it's very circular, where they're all just circulating this revenue amongst each other. And that end market demand better show up. $11.9 billion, Ryan. Did you know that CoreWeave spent almost $9 billion in capital expenditures in 2024?
I saw that. That is insane.
That is AWS and all these cloud providers must have been burning a ton of cash while they were starting up.
I mean, not this much.
Maybe not this quickly. Yeah, not this quickly.
That
What do you think of this
they
one?
were losing money. Like you go back to the 2009 days, that reporter asked Bezos how much money he's willing to lose on AWS.
What do you say? Everything?
He said, I can't remember the quote. Basically,
He is
that
cheeky.
was
Yeah.
when he said, "We think it has an unlimited runway. We're willing to continue investing."
Yeah, we have a comment here. Microsoft, which makes up 60% of CoreWeave's revenue, will likely sack off CoreWeave, and that's a lot of their business. Hopefully, that's not some like British derogatory term. Either way, they're going to get rid of them. um, the yeah, this business is risky, and I do think the timing on this, they just want to pump up their demand before the IPO, right? Like this is not coincidental timing.
Yeah, it's kind of a bummer because I'm starting to feel like the IPO market's never going to open again. I think CoreWeave's they they
What
filed
if they
that
don't? What
S1.
if they never get out? What if
They
they don't
filed the
even come
S1
out?
at a great time,
Yeah.
but markets have just absolutely soured since that S1. So I got a feeling there's a possibility that they pull their IPO.
That it would be so funny. We've been waiting years for the IPO market to open up, and just one company files an S1 and the market crashes. That would be hilarious. I hope that doesn't happen because it makes it way more interesting as a podcast to be able to talk about the core weaves of the world, the new businesses entering out there. And I think listeners enjoy that one as well. Anything, yeah, the guy says that is a British slang term. And the fact that CoreWeave was founded by either private equity analysts or hedge fund analysts or portfolio managers to be a crypto mining company and then decides to pivot to becoming an AI startup, you got to be skeptical starting out with that
Yeah.
with that information.
Yeah, it's easy to be mesmerized by the revenue growth, but just take a look at the CapEx line.
Yeah, $6 billion in negative free cash flow last year, and it'll probably be higher in 2025. But what's you got $15 billion in remaining performance obligations. That's probably going to be $30 billion at some point in 2025. So there's some positives and negatives there.
And $6 billion, well, whatever, $9 billion in capital expenditures on potentially the fastest appreciating assets in human history.
Yeah, what scares me about the AI CapEx spending, at least from especially someone like CoreWeave, who is not part of a larger conglomerate that's gushing cash, is people make the comparison to the telecom build out and the fiber build out in 2000, 2001. But those assets did not depreciate nearly as quickly as in this hyper competitive, the semiconductors, whatever. We're not experts on that. But what I do know is that those ones didn't go out of style nearly as quickly as these ones will. That doesn't mean these are bad businesses. It's just different. And if the bubble pops, it can get ugly quick.
Yeah, if you're cheering for NVIDIA's innovation on the GPU front, you should be concerned about CapEx spending.
True. Yeah. All right.
Whatever.
Well, on that positive note, Ryan, let's close things out here. Thank you for everyone that tuned in live. We do these typically Wednesdays at 1:30 p.m. Eastern time. We went 15 minutes early today, but we try to give updates in the Substack chat and on Twitter to give any updates on the show. Next week, we will be going live on Thursday because Wednesday, Ryan is at an investor conference. Do you want to say where you're allowed to say you're going, right? So if anyone's at Future Proof,
Yeah,
hit
if
them up.
anyone's going to Future Proof in Miami, feel free to shoot me a message.
All right, beautiful. Yeah, so we'll be doing this one Thursday next week. Shout out to our sponsors, Public, Blue Chippers Club, FinChat. Thank you for sponsoring the show, and go check out those products. We really enjoy using all three of those. As a disclosure, we are not financial advisors. Anything we say on the show is not formal advice or recommendation. Ryan, I, or any podcast guest may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, once again, and we'll see you next time. Cool. I think that was a good one. What do you think? Title. Lots of good title.